Hi students, in this video I'm going to solve the CLERC Limited, and the requirement in this question is to prepare the profit and loss account and statement of financial position. So first thing, read the requirement. Second step, draw the formats. So my formats are ready. Next, I'm going to pick up the figures from the trial balance line by line and enter them into the formats, and then I will deal with the notes. So the share capital is 100,000, share premium is 20,000. Next is revaluation is 50,000. Payables are 13882. Revaluation will be recorded in the capital area, and the payables is 13882. Land and building is 210,000. Accumulated depreciation is 30,000. Land and building is 210. So I'm going to erase the other three zeros on the top. And the accumulated depreciation in the question is 30,000. I better put brackets around it so that I will remember to subtract this figure. Next is the plant and machinery is 88,000 and the accumulated depreciation is 16,010. Receivables are 8,752. In my current assets, I will be recording receivables. Accruals are 3,029. Loan is 40,000 and the name of the loan is 5% loan. Cash and cash equivalent is 6,993. Retained earnings 23,893. Sales is 178833. Because I do not have any retained earnings, otherwise I would have written the figure in the first column, subtracted the retained earnings, and then recorded the final figure on on the left hand side column. On the right hand side column. But there is no return inwards. So even if you have written return inward in your exam question, you will not lose any marks. You can just leave it as it is. You don't even have to put 0 in front of it. Next is purchases 130,562. Distribution costs 7,009. Administration cost is 7,100. Opening inventory is 17,331. Bank interest, now you can see bank interest received and it is written on the credit side. You can either include that here in the by adding 100 into the gross profit, or next to the interest you can write it as a positive figure 100. So I'm going to, because it's interest, I'll record it somewhere close to the interest. And this is, so this is interest received of 100, which I will record it as a positive figure. When I will calculate the interest paid, I will record that as a negative figure. Now dealing with the notes, it says the interest for the year on the bank has to be accrued. Now you can see that the bank balance is 40,000 multiplied by 5%, it is £2,000. So the interest expense should be recorded over here in the income statement. And because we have not paid for it, so we have to record as interest payable in the liabilities. Next we have land, which is non-depreciable, is included in the trial balance at a value of 110,000. On 31st of December 2009, it was revalued to £150,000, and this revaluation is to be included in the financial statements. In fact, I should do all my workings with red color. You can see the effects. Over here, I'm going to do working number 1, land. Land revaluation, 150,000 minus 110,000 is equals to 40,000, and this land has been revalued by 40,000. This 40,000 will be recorded in the other comprehensive income. It will be recorded in the capital, and it will also be recorded in the land and building, 40,000. Next, it says the depreciation is as follows. On building, it's a straight line, 10%. On plant and equipment, it is 20% reducing balance method. So let's work out the depreciation. Building is straight line. So we need to find out the value of the building. You can see that 210 was the value of land and building, in which land was valued at 110,000. So if I take 120,000, sorry, not 120, it's 210,000, which is the value of land and building, and subtract the original value of land, I will find the value of building, which will be 100,000, on which I will apply 10% depreciation. You can see it is 10% depreciation, and that will be £10,000, sorry, £10,000. On plant and equipment, does it say plant and equipment over here? Yes, 20% reducing balance method. The value of plant and equipment is 88,000. You can see 88,000, and the accumulated depreciation is 16,010. If we subtract accumulated depreciation from the value of plant and equipment, we will find the net book value. 88,000 minus 16010, and that will give me the value of my plant and equipment, which is 71990, and I will apply 20% reducing balance method, and the depreciation charge will be 14398. Now, the next thing is where to record them in the income statement. We have some information provided over here. Depreciation on plant and equipment should be charged to the cost of sales. So 14,398. 14,398 depreciation plant. Okay, that building. Right. Then it says that as part of the building contains office accommodation, the depreciation of the building is apportioned as follows: to cost of sales 40%, to administration expense it is 60%. So 40%, 60%. Cost of sales 4,000. Admin 6,000. And admin is 6,000. Next, included in the trade receivables is 1,720. Oh, we also have to subtract these depreciations from the asset. So we are going to add them in the existing depreciation figures. So you can see that the depreciation has been included in the accumulated depreciation figures, and they have been recorded in the income statement in the cost of sales and the administration expense. You can see 14,000 has been recorded here, and this 10,000 has been recorded over here. Next, note number 4, included in the trade receivables is a balance of 1720 that is considered to be irrecoverable due to the customer going into administration, and the directors of CLERC Limited feels that it should be written off. 1720. And it should be charged to the administration expense. So we are going to subtract 1720 from the receivables, and we should include that over here, 1720 in the administration expense. The closing inventory is valued at 19,871. Below that, there is some information. Included in this balance was the inventory line of £4,000 that, due to the change in the legislation, is now illegal. CLERC Limited could rectify the item at a cost of 2,500 and plans to do so. This item usually retail to customers at £6,000. So they are saying that in the inventory there is a stock that is worth £4,000, and because of the new legislation it has become illegal. Now CLERC Limited needs to sell it, and to sell it they will have to rectify it. They will have to fix it or make some adjustments to that stock, and to make those adjustments they will have to spend £2,500, and then they can sell it for £6,000. Right, so I'm going to do some working over here. Working number 3, inventory. The value of inventory is 19,871. Now the existing stock, we need to subtract it, that stock that has got some legal implications on it, less inventory line, which is £4,000. First we need to remove it, and then we need to apply that rule of lower of cost and fair value. The cost of the inventory is 4,000, and the fair value, CLERC can sell it for 6,000, but to sell it for 6,000 they have to spend 2,500 on it first. So take the lower of it's 3,500. So we need to add 3,500 into it. Oh, no brackets. Become 19,371. So this is the value of the closing inventory. So what you could also do was 19,871 minus 500 to get 19,371. But I like to do it in steps, so just to show you that first we have removed the affected items, and then we have added back the value, the fair value of those affected items. So now 19,371 is the value of my closing inventory. And I should also include that in my current assets. Right. Next is the tax is 7,162. 7,162. And because we always pay tax later, therefore we need to include that in our current liabilities. All the notes have been taken account. We have dealt with all the notes. Now next thing we are going to do is close our profit and loss income statement. So opening inventory plus purchases plus the depreciation of building plus the depreciation of plant minus the closing inventory, and that gives us 146,920. That is the cost of sales. We need to subtract the cost of sales from the revenue, and the value is 31913. That is our gross profit. Total administration expenses are 14820, and total distribution expenses are 7009. Adding these two together, it is 21,829. Subtracting expenses from the gross profit, it is 10184. Then adding, no, it's let me enter the figure, 31913 minus 21829 is 10084. Then add the interest received minus the interest paid is 8184. Then subtract the tax out of it, it is 1022. Then other comprehensive income, there is a land revaluation, and the total is 41022. Now this profit is going to be part of the capital, which is 1022. There will be dividend, so just leave it blank. Right, let's now add all our assets. So land and building minus the accumulated depreciation plus equipment, plant and equipment. Yeah, equipment. I've just written equipment. It is actually plant and equipment less the accumulated depreciation, and the total is 267,592. The receivables less irrecoverable debts plus the cash plus the inventory, and the total is 33396. Adding the non-current assets and the current assets, we will have 300988. Next, add the capital plus the premium plus the revaluation plus the retained earnings plus the profit for the year, and the total is 234915. Loan is, there's no changes in the loan, 40,000. I'm going to just move this figure over here. Liabilities, payables, accruals, interest payable, and the tax payable, it's 26073. And then adding the capital, non-current liabilities, and the current liabilities, the total is 300988. So you can see all the figures are equal, all the assets plus the capital and liabilities are equal. Thank you very much. I hope you'll find this video useful, and this is the full solution.